I've made a video about this exact setup for the past 3 years, and for the most part, this setup has been about the same. But in 2025, there's been some big changes to this setup, not only because things are just more expensive nowadays, but also there are more credit cards than ever to choose from. I'm also a big fan of simplicity, so while having 10 Citi Custom Cashes would be the short answer to the best no annual fee credit card setup, in practice, this may not be the best way to go. And so in this video, I'm going to reveal what I think is the best no annual fee credit card setup in 2025 and explain why I chose the cards that I did. Now, I mentioned that things are different now in 2025, and that's because of new card products as well as inflation. And due to these reasons, there are actually two versions of this setup now. One with a lower asset requirement and one with a higher asset requirement. And here's why two versions of the setup are necessary. In the past, Bank of America was the only bank that offered a credit card bonus multiplier depending on the amount of assets you had with them. But with the introduction of the US Bank Smartly card, US Bank has now entered that arena where you can earn as high as 4% cashback depending on your asset level with US Bank. So while it may not be super difficult to meet these asset requirements, especially considering retirement accounts, not everyone is able to do so. But there's another twist to this story as well. Because the Smartly card has now set the bar so high as a 4% catch-all card, the 2x or 2% cashback equivalent cards, in my opinion, are no longer the standard for catch-all credit cards. Earning 2% cashback or higher should be the table minimum in 2025. And so with that in mind, let's first start out by building the best no annual fee credit card setup that involves a lower asset requirement. Now, since we're building out a setup geared towards everyday spending, I use a simple framework of 3 types of cards to help keep me organized: specialty cards, a general card, and a catch-all credit card. Just to clarify, your specialty cards are your 5% cards that cover specific categories. Your general card is the card that covers a lot of categories in a single card, and the catch-all card covers everything else. And in this setup, there are a total of 6 cards: 4 specialty cards, 1 general card, and 1 catch-all credit card. Now, this seems like a lot, but 2 of these specialty cards are ones that you'd keep in your wallet, and the other 2 cards you just keep at home. And I don't know how you'll feel about this, but the first card isn't even a credit card, but I had to mention it because it's pretty interesting, and that's the PayPal Debit MasterCard. Now, in the past, PayPal had a pretty good credit card, which was called the PayPal MasterCard, and while it still exists today, it's just not as good. It used to offer 3% cashback on PayPal purchases and 2% cashback on everything else. But this was changed in mid-2024 when the catch-all category was dropped to 1.5% cashback on everything else instead. But now they have this PayPal Debit MasterCard where you can earn 5% cashback on a select monthly category on up to $1,000 per month for, obviously, no annual fee because it's a debit card. And as of the recording of this video, the categories you can select are restaurants, clothing, health and beauty, grocery, and gas. And so some of these categories, namely restaurant, grocery, and gas, are everyday categories, so to earn 5% cashback on them is pretty cool. But even though this debit card looks great, it's important to keep a couple of things in mind. As a debit card, this model of earning 5% cashback in a single choice category, even with the monthly limit, isn't sustainable given that interchange fees are capped on debit cards. My guess, and this is just a guess, is that this card is positioned to be a loss leader to get people to sign up for a PayPal debit account. And then, when enough signups occur, the debit card is going to get nerfed, just like we saw with the PayPal MasterCard. So there's that, but we always want to be aware that some things always look better on paper than they do in real life. As a personal example, I signed up for this card, which was pretty easy to do, but I had a lot of difficulty funding the account. At least for now, I'm only able to transfer money from my bank account in $100 increments, which is pretty frustrating, especially since I use ACH, which takes 3 to 5 business days for the transfer to complete anyways. Now, this may just be because it's a new account, but if this continues, I'm not going to be able to take this card seriously, so we're just going to have to see what happens. But if it eventually works as advertised, this could be a great 5% cashback card to consider. And for this setup, we're going to set this 5% category to restaurants. And since food is always a top 3 expense in most US households, the next card I want to discuss is that grocery category. And there's no better no annual fee grocery card than the AAA Daily Advantage card. Now, this card earns 5% cashback on grocery store purchases on up to $10,000 in a calendar year, among other multipliers. then 1% cash back thereafter. Now I know some of you may be wondering, why not just use the Capital One Saver card because it earns 3% cash back at grocery stores and on dining instead of both using the PayPal debit card and the AAA Daily Advantage? And I think if you wanted a simpler solution or wanted a card with no spending limits, then the Saver card would be a great solution for that. But if you fall within the caps of $1,000 per month for restaurants and $10,000 per year for groceries, from my perspective, I think you'll end up with a better return using the combination of those two cards for your food purchases. Okay, so the next two cards are ones that you won't need to carry with you on a daily basis, but are still good to have because of their 5% cashback categories. And the first card of the two is the US Bank Cash Plus card. This card earns 5% cashback on your first $2,000 in combined eligible purchases each quarter on two categories you choose, among other multipliers, then 1% cashback thereafter. And there are quite a few 5% cashback categories as shown in this chart here from the US Bank website. And you can see that although there are a lot of options, these aren't common everyday categories. Rather, these are select subcategories. For example, fast food is a subcategory of the restaurant category, and ground transportation is a subcategory of the transit category. But if these options work for your spending situation, you can set two of these categories to earn 5% cash back. And the two I'd recommend would be home utilities and gyms and fitness centers. Of course, these may not be the best ones for you, but as someone who needs to go to the gym more, at least that's what my wife says, those are the two that I would use. And we all do a lot of online shopping, and so the second card of these two would be the Chase Amazon Prime card. As the name suggests, this card earns 5% cash back on Amazon, as well as Amazon Fresh, Whole Foods Market, and on Chase Travel, which can be very helpful if you use these categories and spend money in them as well. Now I know there's this big debate about whether the Amazon Prime card really has no annual fee, since you do have to be an Amazon Prime member to hold this card, which has its own fee of $139 per year, but for the sake of this video, this card has no annual fee. And if you happen to shop for groceries at Amazon Fresh or Whole Foods, then this card can either replace or complement your AAA Daily Advantage card for grocery purchases. Okay, so those are the specialty cards for this setup, but the general or main card in this setup is going to be the Wells Fargo Autograph card. This card continues to be a great all-arounder that has no annual fee and no foreign transaction fees, and earns 3x points back on restaurants, gas stations, travel, transit, popular streaming services, and phone plans, as well as 1x points back on all other purchases. So this is a great card to capture a lot of those everyday spending categories at an elevated multiplier, as well as serve as a buffer for restaurant spending in the situation where you may spend more than $1,000 at restaurants in a single month. The card also comes with up to $600 of cell phone protection against damage, theft, or unintended separation, subject to a $25 deductible, which is a nice plus. And this brings us to our catch-all credit card, and I never thought I'd say this, but here we go. For this setup, if you can get off the waitlist, I would go with the Robinhood Gold card. Now I made this decision based on the card product itself and not based on Robinhood, but after comparing this card and the Alliant Visa Signature card, the Robinhood Gold card is the better choice with its 3% cashback, and let me explain why. With the Robinhood Gold card, you earn 3% cashback on everything, but it's important to know that this definition of everything is yet to be determined. And while this card has no annual fee, you do need a Robinhood Gold membership, which costs $50 per year, provided that you pay annually. On the other hand, with the Alliant Visa Signature card, you earn 2.5% cashback on everything on up to $10,000 per billing cycle, then 1.5% thereafter. And again, while this card has no annual fee, you also need to have a high-rate checking account with Tier 1 rewards, with one of the requirements being that you need an average daily balance of $1,000 or more. So if that $1,000 is sitting in a checking account earning 0.25% interest, which is the rate at the time of the recording of this video, that means that there's about 4% APY that this money isn't earning while it's sitting in that checking account all year. So doing the math, that's costing you about $40 in interest that you would have had if this money was in a high yield savings account. So in effect, the Robinhood Gold card earns 3% cash back for $50 per year, and the Alliant Visa Signature card earns 2.5% cash back for about $40 per year. And so for that extra $10, you need to spend at least $167 per month to get net positive value on the Robinhood Gold card over the Alliant Visa Signature card, which I'm pretty sure is very achievable with your catch-all credit card. And if we compare this to just a no annual fee 2% cashback card, you'd have to spend at least $416 per month to get positive value with the Robinhood Gold card. And I also think this is something that's not hard to do as well. But if you don't think you'd meet these numbers, then in that case, the Alliant Visa Signature card is a nice choice, or even a 2% cashback credit card would work too. Okay, so let's recap. We have the PayPal Debit MasterCard earning 5% cashback on restaurants with a $1,000 per month cap. We have the AAA Daily Advantage card earning 5% cashback on groceries with a $10,000 per year cap. We have the US Bank Cash Plus card earning 5% cashback on 2 select categories, and for this example, we'll choose home utilities as well as gym and fitness centers with a $2,000 per quarter cap. We have the Chase Amazon Prime card earning 5% cashback on Amazon purchases, the Wells Fargo Autograph earning 3x on multiple everyday categories, including travel, transit, and gas, and the Robinhood Gold card earning 3% cashback on all other purchases. And just to be complete, this setup requires cash in a PayPal debit account, an Amazon Prime membership, and a Robinhood Gold subscription. So you can see already how complexity starts to find you even with this simple no annual fee setup. Now I do want to mention 2 cards that could also work in this setup, but I left them out because it really depends on your situation. So in this year's setup, the Citi Custom Cash was dropped, and the reason why is that a $500 limit per billing cycle, in my opinion, isn't really high enough anymore. Now of course, it's going to depend on what category you use this card for. But when it comes to staple categories like restaurants and groceries, prices are so inflated that a smaller and smaller percentage of people can realistically fit their budget under $500 for these categories. Now, I'm not saying that the Citi Custom Cash card is a bad card by any means, but it's definitely more of a complimentary card than a main spending card. Another card that I want to mention is the Kroger Rewards World Elite MasterCard, which is a no annual fee card that earns up to 5% cash back on mobile wallet and Kroger Pay transactions. But specifically for mobile wallet purchases, you can earn up to 5% cash back on the first $3,000 in purchases each calendar year, then 1% thereafter. Again, while the mobile wallet category covers a lot of ground, that $3,000 yearly cap is just too low in my opinion, and unless you get multiple versions of this card, having one card is helpful, but it's not as helpful as it should be. Okay, so that's what the lower asset requirement setup looks like, but what about the higher asset requirement setup? Well, of course, we're going to be using cards from Bank of America and US Bank. Specifically for Bank of America, you need to be in the Platinum Honors tier and have at least $100,000 in assets, either with Bank of America or Merrill Lynch. And with US Bank, you need to have a combined qualifying balance with US Bank or US Bank Corp investments of $100,000 or more. And these aren't small numbers by any means, but if you put these assets in taxable brokerages or IRA accounts, this doesn't cost you anything, provided that you'd have these investment accounts anyways. And so with $100,000 in Bank of America and $100,000 in US Bank, here's the best no annual fee credit card setup, and it only involves 2 types of cards. The first set is 3 Bank of America customized cash rewards cards earning 5.25% cash back and up to $2,500 per quarter in a select category, then 1% cash back thereafter. And these categories are gas and EV charging stations, online shopping / cable / streaming / internet / phone plans, dining, travel, drugstore / pharmacy, and home improvement / furnishing purchases. And the reason why I chose 3 customized cash rewards cards is that this gives you the flexibility of targeting your 3 highest spending categories within the list above, or you can select the same category and have a higher quarterly cap if that makes more sense for you. Of course, the more of these cards you have, the better. But I think 3 is a good balance of value and simplicity. For our household, we have 2 of these customized cash rewards cards, and the most helpful categories for us are gas and online shopping. But we plan on getting a 3rd customized cash rewards card for the reasons I mentioned earlier. And for your particular setup, only you are going to know how many customized cash rewards cards is enough. In any case, once you figure that out with the Bank of America cards, the US Bank Smartly card is going to be your catch-all credit card for that uncapped 4% cashback on all purchases. And if you just want to deal with one bank, you could just use the US Bank Smartly card for everything. But having those extra 5.25% cashback cards really adds that extra flair to this no annual fee setup. And of course, you'll need a lot of assets to get there, but once you do, this is a fantastic credit card setup to have. Okay, so those are the best no annual fee credit card setups, both with a lower asset requirement and a higher asset requirement. The higher asset requirement setup is simpler than the other, but you still must put in that upfront work to get those brokerage accounts set up. And you certainly have to keep track of a lot of extra accounts and spending caps with the lower asset requirement setup as well, with this setup requiring continuous monitoring to ensure that it keeps earning those elevated multipliers that you expect it to. Sadly, this is the way the credit card industry is moving, where there are a lot of cards with higher rewards, but they come with work, either up front or throughout the time you're using the card. And while a no annual fee 2x or 2% cashback credit card will always be the easiest to manage, adding cards with higher multipliers can really supercharge your setup in a big way if you're okay with putting in that work. And when you start building out your credit card portfolio, it's important to have a good system to keep things organized. And to see the best way to do this, check out this video next.